day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for the close of business on Tuesday, the 7th of January, 2020, just after 4:05 p.m. Central Time. So, what happened late in the day is the stock market, while you're seeing these prices, it was down more than this at the very end. And one of the things that happened is there's leaks going on that the U.S. is preparing what sanctions it might put on Iraq if our forces were forced out of Iraq. In other words, for all the monies that we put into defense there to help them, blah, blah. Do I think it'll happen? Not necessarily, but it doesn't hurt to let the other side know there's a cost. I think that's what the president is doing. The USMCA deal, it passed one of the committees in the Senate that now makes it viable to be voted on as soon as Mitch McConnell decides it should come to the floor for a vote. That's good news. Tomorrow, I believe the House of Representatives is in full session. Maybe we'll get an idea if they're going to do anything with the impeachment articles and how that's all going to play out. And then next week, you've got to remember that we're going to be looking hard to see what the deal is that the U.S. and China are signing, and if they let us really know any of the super particulars to it. It's going to be a very interesting time ahead of us. As you can see in the grain market, sort of muted today, not a lot going on here. The energies were down, and at the end of the day, the API number, I thought, came out negative with about a 6 million net barrel build. Didn't look friendly to me. Bonds and notes down a little bit, which I thought was interesting given that the stock market was under some pressure. The gold and the silver market both well bid, and these markets were a bit higher than this in the last trades of the day. Dollar index up as foreign currencies backing off, and the economic numbers today out of the U.S. look pretty good overall. So, we're getting ready, as you know, for Friday's USDA WASDE report. Supply, demand worldwide, what our ending stocks are going to look like. And then before you even know it, I realize it's only January 7th, we're going to be talking very, very soon about planning intentions. But first, we get these final supply-demand numbers, and they are going to have a market impact. So you've got to think that through, how you want to position yourself if you go through the report. We're still up into that resistance zone of 4 cents for the week in the first 2 days, right against that 935 area. Been here, done that before. Will the market be able to add to this? When we look at a daily bar chart, you can see what I'm talking about. We'd been up here into the 960, fell back, and that's why I'm saying been here, done that. If you look at it, you can see where you're at. Now, this chart formation, should you get unclose under these lows, could get rather ugly very quickly. And should the market take off to the upside, well, the question will be how long and what does upside mean? If the market just keeps churning here, what kind of chart formation do we get? When I look at the swing line, today was an important day. You came down, challenged again the 937.5 area. You still have the pattern of higher lows, higher highs. Today's low is 937.75. It was unable to take that 37.5 out. And while it closed down 3/4, the chart action is still okay. Should you take out 948, you keep the pattern of higher lows and a higher high very much alive. Should you get under 937.5, you could turn this market to lower highs, lower lows. Against what numbers? Well, the 18-day average is right here. Do you see where that red line is? We talked about this yesterday. I'll talk about it again today. That is the number that seems to be acting as support in the market. Will you try to see if there's stops under 37.5 and then whip back? Anything can happen as you get ready for a big grain report. I've learned that over the years, and that's how I view it. But until you take that out, who's in control of the market? Well, the bias is up because you're over the 18-day average. I define bias as defined by the relation of price to the 18-day average of closes. When you're over it, bias is up. Under it, bias is down. Swing line is up. That's good. In terms of the Bollinger Bands, they're way up here at 964.5. I think the farmers would be jumping up and down in splendor if you could get up to the 964.5 level. And momentum is divergent, okay? Remember we talked about this yesterday. You've turned down I was looking for a possible challenge when you lost the embedded reading back here of the 18-day average of closes. We certainly got very, very close on Friday and Monday. You see that. Today, just for good measure, the market hit it, and now the market's questioning what to do with it. That's how I'm viewing it. So the momentum down, the bias up, the trend up, and we're stuck between 948 and 937.5. In the meal market, I still see a market with the pattern of lower highs, and if we look at this low, 330, and we go to this low right here, that's 310. So we've got a pattern of higher lows, lower highs. I'll let you tell me, are we not battling at that 18-day average? We are, in my opinion. If you take out 330, it will confirm that the market's back into a downtrend, possibly setting up a challenge of 298.10. Conversely, take out 304.50, and the question is, can you bump through the 100-day average? If you can do that, you'll be into an uptrend, upside bias, and maybe momentum will stop the pointing down. Could it get into the 308.30 zone? First challenge is going to be anything between 305.40, 303.20, but going home, I view the market as having the swing line down. And yes, it's in a pause because you got the higher lows, but the legacy is still lower highs and a lower low. I always look at that, but I'm cautious with it. And you have gotten to a point where you're oversold. Any reading under 30 is oversold. Where the strength is still showing up in the market has been soy oil. Now, soy oil's got its own series of problems. If you look right here, you lost the embedded reading, not on Friday. This is still embedded. Both the K and the D lines, the red and the blue, are going sideways over 80. You lost that yesterday. The only day you can get it back is the day after losing it, and you didn't do that today. So like we just talked in the soybeans, will the market come down to the 18-day average? That's what it owes if the market wants to let go. If 34.38 is taken out, you then have a pattern of a higher high and then a lower low, no trend, setting that potential up. You're not there yet. The question is, does the lost momentum mean you're going to go to the 18-day average? I think the longs have temporarily lost their momentum in the marketplace, but the trend is not down. In the corn market, you can see the battleground, the 18 and the 100-day average, the green and the red. The market has been working its momentum lower. When we reopen tonight, you might be at the point where you're oversold. Should this market take out 382 3/4, it adds another layer to the already lower highs, lower lows, and you could be putting in a challenge for the 376 1/4. This market needs to stay over those two numbers if it's going to nullify the bearish momentum that's setting in. In the wheat market, we were overbought, never did embed. We've pulled back to a neutral zone. I call the 18-day average of closes, as many of you that are regular viewers knowing, neutral. So going home, you don't have a swing line trend. You have a higher high, lower low. The bias of the market is up because you're over the 18-day average, but momentum is pointing down. The chart's a mess in plain English. In the sugar market, we've gone from the lower Bollinger Band to the upper Bollinger Band. I want to show you yesterday, I was mentioning this, and today the market made a higher high and then came back. A hard one to call right here. I don't see a trend at work. I see a market that's more at work in trading the lower and upper Bollinger Bands without a trend at play. In the coffee market, this has been a washout to the downside. The market, once it cleared this area right through here, just let go, and it was this day. You had that big break, it followed through. The market's already in oversold territory, and it just seems to be grinding and working now. You can see at the Bollinger Band yesterday, you're paying attention to it, but you're not bouncing away from it. A trendless market, downside bias, oversold condition. In the cocoa market, cocoa rescued itself today to the upside. The trend is up, higher lows and a higher high. My definition of uptrend is higher highs, higher lows. I then filter and look for the bias. Well, the market bias is up as long as you're over the 18-day average, and you did that. In fact, Past 2 days, you've hit that number. I would throw that I'm wrong in my analysis if 24.67 were taken out, yesterday's low in the market, especially if you didn't take out 25.76. But going home, I think the bulls grab control of the market. The momentum up, bias up, trend up. If the market can clear this 25.76, 2600 would be the next resistance, while supports the 100-day average at 24.63, but that would be under the 18-day average, and how much support I don't know it would find. The market that's the strongest of this whole group is the cotton. And remember, cotton in the United States is an export market. We sell it abroad. Ideally, China's going to buy a lot of it. And this could be one of the elements, and you can see how the market's been responding ever since early part of December. It has not gotten back under the 18-day average. Resistance between right here and the 70.66 level, as long as the slow stochastic stays embedded, both numbers over 80, I think the pros are buying on the breaks. In the cattle market, remember I said yesterday, in fact, I've been pointing this out for a long time, look at all this sideways action. This is going to be a big move out of here. The trick, obviously, is which way. Some people have asked me, what do you do? I said, well, if you want to be a wise guy, you can step further back, because the April cattle looks similar. Maybe you buy a call and a put, and you're saying, when it breaks out, I'm going to try to catch the move one way or the other. Other people are saying, well, what's the direction right now? And temporarily, it's void of trend. You've got a higher high, a lower low. You keep hitting the 18-day average of closes. You're locked in between those bands. You've got momentum up and bias up, but that's about all that I could say about it. In the feeder cattle, you've gone from the lower Bollinger Band right here. Couldn't follow through, as you can see. You come back, you challenging the 18, and then you go right to the upper Bollinger Band, knocking out the guys that were playing the market for the long haul. That didn't happen. It pulls back to the 18-day average, or void of trend. Again, the sideways action in the market. And in the hog market, we have a pattern of higher high, lower low. You went down, challenged yesterday the Bollinger Band. And you know what I'm going to tell you each time? You challenge it. That's where I think pros take some money off the table, and you're getting a bounce away. Obviously, everybody's waiting to see what does China buy from the U.S. And we discuss this. In fact, we're going to discuss the grain trade in great detail, the meat markets, and we do it in our market research. So if you're a futures trader and you're looking to see what people write for their commercial accounts, option strategies, future strategies, you might want to take a look at what we put out for our clientele. And no, you have to either be one of my research clients, or you have to have a trading account to continue to get it. It's one of the two. But if you haven't seen it, why not take advantage? And you can choose which areas you want. You don't have to take them all. You make the decision. But how do you get all this research? It's simple. Go right to our website at www.iraepstein.com. In the bottom right, you're going to see free trials. You can call my staff. They'll take care of you and have you on this right away. Or you can click right up here to get it. But with all that's going on, you might want to take a look at what our expertise can offer you. Maybe, just maybe, it'll help you with some of your trading. I'm Ira Epstein. You have a great day.